Welcome back to Explain the Charts, your go-to channel for comprehensive stock analysis. Today, July 18th, 2025, we're putting Intel Corporation, ticker Intel, under the microscope, combining the latest news with a deep dive into its charts. Before we hit the technicals, let's look at the headlines impacting Intel. Intel is currently trading at $23.195, showing a modest gain of 1.75% today from its previous close of $22.80, which we can see here on the daily chart as yesterday's close. However, the broader picture reveals a challenging period for Intel, with the stock declining over 0.5% this week and a significant 33.8% over the past 52 weeks. Analysts at Citi maintain a neutral rating with a $24 price target, suggesting a potential short squeeze if upcoming earnings exceed expectations. The average analyst rating is also a hold, with 32 out of 38 analysts recommending this stance. Intel is set to report its fiscal Q2 2025 earnings on July 24th, with analysts anticipating a loss of 14 cents per share, which would be flat year over year. Interestingly, one analyst's discounted cash flow calculation suggests a fair value of $32.31, indicating potential undervaluation, albeit with high risk due to ongoing geopolitical tensions and intense competition from rivals like Nvidia and AMD. Let's now turn our attention to the charts to see how these fundamental factors manifest in price action. Looking at the daily chart for Intel, and specifically narrowing in on the period from late July to early September 2024, we observe a critical reversal. Notice the sharp decline around August 1st and 2nd, 2024, where the stock plunged from approximately $30.74 to $21.48. This massive single-day drop, accompanied by exceptionally high volume of over 300 million shares, likely correlates with the news of Intel's foundry business reporting a significant $13.4 billion loss in 2024, despite substantial revenue. This event was a clear breakdown from a previous support level around the $30 to $32 range, turning it into a formidable long-term resistance. The stock spent months consolidating in the low 20s after this event, attempting to find a new base. Moving forward on the daily chart, we can see that Intel has struggled to regain its footing, maintaining a clear long-term downtrend. The 52-week high of $36.30 mentioned in the news occurred back in February 2025 during a strong, but ultimately short-lived, rally. The recent price action shows the stock trading in a range, primarily between $20 and $24. Expanding our view back to the full daily chart, we can identify key price levels for Intel. The $30 to $32 range remains a significant long-term resistance, as it marked the breakdown point and represents a prior area of strong buyer interest that has since evaporated. Short-term resistance can be found around the $24 to $25 level, aligning closely with Citi's price target, which, if broken, could signal a more sustained rally. On the support side, the $20 to $21 area has acted as a strong psychological and technical floor multiple times, particularly during the troughs in late 2024 and April 2025. Below that, the 52-week low of $17.665 seen in April 2025 is the ultimate support to watch in a bearish scenario. The recent activity shows that the price is currently hovering just above the $22.80 previous close, attempting to push towards the $23.50 mark. Volume has been substantial on key down moves, indicating strong selling pressure, but also on some rally attempts, suggesting underlying buyer interest at lower levels. Let's zoom into the 1-hour chart to observe recent intraday movements and gain a more granular perspective on current trends. Focusing on the past few trading days, we can see how the price has reacted to recent news. Following the daily close of $22.80 yesterday, July 17th, the current live price of $23.195 shows an attempt to push higher. Notice the increased buying volume that came in after the market opened today, driving the price up. There's a clear consolidation pattern forming around the $22.80 to $23.20 range over the last 24 hours. This tight range, prior to the July 24th earnings report, often suggests market indecision as investors await further clarity. The high for today so far has been around $23.25, indicating minor resistance just above the current level. The low of the past 24 hours around $22.59 serves as an immediate intraday support level. Watching how the stock reacts to these levels on higher volume will be crucial in the short term. Now, shifting to the 15-minute chart, we can pinpoint even finer details of the current price action. This time frame confirms the recent upward movement from yesterday's close, but also highlights a slight pullback in the very last few candles, reflecting some profit-taking or supply at these higher levels. The volume on these smaller time frames is lower compared to the daily chart, but still indicates active trading. The immediate support here is around $22.76, while immediate resistance is at $22.845. A break above $22.845 on strong volume could signal continued momentum towards the $23.20 area on the hourly chart. Conversely, a break below $22.76 could see the price retest the $22.60 zone, which was a low seen in the preceding one-hour candle. Traders should monitor these microtrends for entry and exit points, especially if they are looking for short-term opportunities before the earnings announcement. Let's consolidate the bullish and bearish arguments for Intel. On the bullish side, Intel appears undervalued based on the discounted cash flow calculation, suggesting a potential upside to $32.31. The significant government investment via the CHIPS Act underscores national interest in its success, and new partnerships along with the RealSense spin-out show diversification and innovation. The much-anticipated 18A chip manufacturing technology, launching later in 2025, could be a game-changer, potentially challenging TSMC's dominance and leading to a significant turnaround. Furthermore, the possibility of a short squeeze ahead of earnings, as suggested by Citi, could provide a strong, albeit short-lived, price surge. However, the bearish case remains strong. Intel's substantial financial losses in its foundry business, coupled with a 33.8% decline over the past year, indicate deep-rooted challenges. The prevalence of hold ratings from analysts reflects ongoing uncertainty, and the costly gamble potential of the 18A technology adds to the risk. Intense competition from industry giants like NVIDIA and AMD continues to pressure Intel's market share and profitability. The upcoming Q2 earnings report, with an anticipated loss per share, is a significant near-term risk that could trigger further downside if results disappoint. Geopolitical tensions further amplify the overall risk profile of the stock. Understanding these opposing forces is vital for making informed trading decisions. To recap, for Intel, important price levels to watch are the immediate support at $22.50 to $22.70, followed by the stronger support at $20 to $21. On the upside, immediate resistance is around $23.50 to $24, with a more significant long-term hurdle at the $30 to $32 range. Our unbiased prediction suggests that Intel will likely remain volatile in the short term, especially leading up to the July 24th earnings report. A breakout above $24, particularly on strong volume, would reinforce a short-term bullish outlook with a 60% likelihood, potentially targeting $25 to $26, especially if earnings surprise positively. Conversely, a break below $22.50, especially if earnings are worse than expected, has a 70% likelihood of pushing the stock back towards the $20 to $21 support, or even the 52-week low of $17.665. For longer-term investors, the success and adoption of Intel's 18A technology in late 2025 will be a critical factor, representing either a potential game-changer for a bullish reversal or a confirmation of ongoing struggles. Keep a close eye on the volume accompanying any significant price moves, as high volume will validate the strength of a breakout or breakdown. Also, continue to monitor broader semiconductor industry news and competitive landscape developments, as these will heavily influence Intel's trajectory.